Now, Budget 2023 had several things in store for the fintech sector, from expanding the corpus for MSME credit guarantee, setting up the National Financial Information Registry, to making PAN the common identifier for digital systems, and also simplifying the KYC process and allowing access to DigiLocker for fintechs. But at the same time, the government did cut down the subsidy meant for compensation of fintech startups and banks which facilitate UPI transactions to about 1,500 crore rupees in this budget. Now, what did the industry make of these announcements? What were the hits and the misses, and how is it going to be impacted by these? Joining us now to discuss this and more are Alok Mittal, the co-founder and CEO of IDENTIFIER Technologies, and Riju Datta, the co-founder of Cash Free Payments. Also joining me is my colleague Arundhati from the Mumbai studio. Alok, let me start with you. This budget is continued with the focus on MSMEs, yes. Whether it's the formation of the NIFR or the additional 9,000 crores pumped into the, credit guarantee scheme. What did you make of these measures? Are they going to move the needle? Are we going to see higher credit flow to the sector?
I think both of these are great initiatives. The credit guarantee scheme, of course, is a continuation of what the government has been doing for past several years. Unfortunately, the benefit of these credit guarantees have not flowed down to micro SMEs because of constraints on the program, the way they have been designed. Fintech lending has been powering bulk of the new credit lending now to MSMEs. However, in the design of the CGTMS program and the microfinance credit guarantee program has excluded the newer NBFCs, which includes fintech NBFCs, from the program design. So we are hoping that as the program details come out, they are not excluding loans that are done above 18% or by BBB rated companies. Those have been the constraints in the past. Certainly on the data side, both these developments are welcome. The DigiLocker expansion in scope, that access being granted to fintech companies, as also the NFIR provisioning, which we assume is a continuation of the public credit registry announcement that RBI had made a few years back. They should organize data and make them accessible for credit purposes in a more seamless manner, thereby reducing the operating cost of lending to MSMEs.
Right.
So we're looking forward to the successful implementation of these programs.
Absolutely. Riju, hi, Arundhati here. Let me bring you into the conversation as well. Now, the simplification of the KYC process, adopting a risk-based instead of one-size-fits-all approach, and building off of a centralized KYC database has made things more simple. What does this mean for fintechs like you? Help us put this into perspective.
Yeah, so I think the budget document talks about simplification of the KYC and without actually detailing what are the actual steps. So we'll wait for that to come out. But I think overall, KYC is as the major problems that we face today, especially with business KYC. So there are two things, right? One is the physical verification that the RBI master direction mandates. So that is probably something that's time consuming and expensive and not in line with the vision of a digital India. And also the second part is verifying the ownership structure of a business entity. Since this is not handily captured in a digital format, because businesses, unlike individuals, are of various types, right? You could have a public limited company, you could have a private, you could have an LLP partnerships, you could have trust in societies, right? And the reason why maybe the advent of Aadhaar has not rubbed off on easier KYC for businesses is because you have more than one, individual who is the decision maker here, right? So that is why maybe business KYC was probably still much harder, whereas individual KYC still moved a bit ahead with the advent of Aadhaar. So that was the major challenge. So maybe we can expect some kind of an amendment to the master KYC directions that specifies when to do a physical verification, right? Which is probably the risk-based approach. Maybe it's not mandatory for all kinds of businesses. Maybe it's not mandatory for all kinds of regulated entities, right? Maybe banks have to do a certain kind of physical verification and payment aggregators do not have to, right? So we'll have to wait and watch what that translates into. But overall, I think it's great in terms of reducing the cost of operations and making user onboarding much simpler for fintech entities. We, for example, spend more than 12 to 13% of our entire costs on cost of compliance and cost of operations and all
right.
Right? So.
All right. So some cost of reduction. Cost expected to come down with those changes brought about to KYC simplification, simpler processes rather. Alok, let me come back to you. You touched upon the DigiLocker and the NIFR, but the move to make PAN a universal identifier for digital systems at government agencies, can that really achieve for businesses what Aadhaar has done for individuals, you think?
The PAN does not have the same regulatory recognition that Aadhaar has, right? We spoke about KYC. PAN does not serve as a KYC document. And even within micro SMEs, where they are proprietor-run businesses for the large part, the proprietor KYC is not enough as a business KYC. So I think the gaps in the business KYC realm are far larger. And it will require re-architecting to understand how the anti-money laundering considerations can be served, especially as businesses become more and more interconnected, right? So if you look at merchants who are selling on e-commerce platforms, right? Restaurants who are delivering through food delivery platforms. There is already a lot of data regarding their bona fides and cash flows. Similarly, the proprietors are running those businesses, and the addition of requirements like address verification or field investigation only adds to that. So PAN as a uniform identifier is a good beginning, because all the other data regarding these MSMEs needs to have a common identifier. However, PAN does not have the richness of information or acceptance by regulators to make it a substitute for Aadhaar or equivalent for Aadhaar.
Okay. Sure. Riju, let me come to you on this part. The government has actually cut down the subsidy which is meant for compensating fintechs like you and banks to about 1,500 crores for providing the UPI transaction services. And, the Payment Council of India, for instance, has asked for 8,000 crores. What do you make of this?
Yeah, so I think, that is something that would have been good to see, right? But we'll have to work with that. But the good part is, I think today fintech companies are able to diversify, since everyone is adopting digital financial services. So there is a large market for us to tap into and try to monetize, right? So that's the bright side. But obviously, some kind of relief there would have been more than welcome.
Right. And Alok, now the announcement was also there, the data verification and NIFR measures were introduced in the budget. Will this sort of help remove trepidation that still exists in rural India for using digital payments?
The NFIR actually promises to bring in all the financial information of these entities on one platform, right? Including the real-time credit information. The credit bureaus that are operational today don't have real-time information. That's a once-a-month reporting interface. So I think it is somewhat orthogonal to the digital payment revolution, especially given that we are in MSME lending. Digital payments has created the trail of transactions. But things like bank statements, which are being enabled by account aggregators or real-time credit profile, those are orthogonal elements to the payment streams, which will be helpful in provisioning of financial services to businesses.
All right. And Riju, overall, what's your biggest takeaway from the budget? Apart from these measures, were there any big misses?
I think maybe I wouldn't say so. From the fintech point of view, I think KYC was the need of the hour, right? So, and especially with the recent developments and business KYC, so as a payments company for us, so we'll wait to see what the actual translation is in terms of implementation. But I think overall it was a pretty happy budget for us. The angel tax is maybe something that was being discussed earlier, is something that's also affecting a lot of the startups. That is there.
All right. And Alok, you have the final word. Anything more you would have wanted to see in the budget that was a glaring miss?
I think there is potential to do more by way of liquidity injection for MSME lending, especially given the macro environment, which has caused a tightening of liquidity and hardening of interest rates. So that can actually be done at several other levels besides the budget. We are hoping that there will be adequate availability of capital for onward transmission to micro SMEs.
All right, Riju, Alok, we're completely out of time. Thank you so much for joining us on the show and helping us understand how the fintech sector was impacted by the budget.
Thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.